Hello and welcome back to another episode of the For the Property Investor podcast, and we're here with the weekly news again. Welcome, Nick Bendel, the man that brings us the news.
Great to be with you, Owen. Thank you so much, and I'm really looking forward to discussing our stories.
Yes, I'm sure you've got three great stories for us this week. But firstly, what have you been up to work-wise in the past week?
I've had a really enjoyable week. My company, Hunter and Scribe, we write content for finance and property professionals, and one of the things we do a lot of is award submissions. We write a lot of award submissions. Many of our clients have either won national awards or been nominated as finalists. And at the end of last week, we had a residential builder and a commercial builder contact us about helping them with award submissions.
Okay. And as I'm sure you will help them win, or at least get close.
Well, I will do my best. As I always say, when our clients do win, it's because of the fantastic work that they have done. If we can just kind of nudge things in the right direction, we're glad to be of assistance.
Okay, very good, very good. Well, us here at Leafield Real Estate, being a national provider of property management services, we are we've been very busy still with leasing. We've got so many properties on the market. We're so busy leasing. We got about 5 or 6 done last week, and we literally got 4 today. So there's probably a few more to come. And there's more properties still coming on the market. So it's very active, the most active January we've ever had for leasing of properties. So that's been a lot. And of course, we had, being the first business day of the month today, we had an end of month today, which is when everyone gets paid. So everyone likes to hear from us. But of course, everyone has lots of questions. So yeah, that's been my week. Very busy and getting lots of properties leased, helping house Australians.
Well, thank you for that.
Yes. Now you've got some stories for us, Nick. What's first up this week?
Well, just before we go into the first story, just by way of context, today is Monday, February the 2nd. Tomorrow, Tuesday, February the 3rd, the RBA are going to hold their first monetary policy meeting of the year. So our first story today is RBA tipped to raise rates after bad inflation numbers. All 4 major banks now expect the Reserve Bank to increase the cash rate on February the 3rd after a further rise in inflation. The latest data shows that inflation rose from 3.4% in November to 3.8% in December, marking the 5th straight month inflation had been above the Reserve Bank's target range of 2 to 3%. Even worse, inflation might be increasing. Prices rose 0% in both October and November, but then jumped 1% in December. Treasurer Jim Chalmers said the federal government was not responsible for this inflationary surge. What's very clear from this data is that it reflects a resurgence in the private sector and not an increase in public sector spending, he said. If our budget was the problem, if public spending was the problem, then we wouldn't have seen 3 interest rate cuts last year. So, Owen, we're chatting before the Reserve Bank meeting tomorrow. Just wondering, do you think the Reserve Bank will raise rates tomorrow? And slightly different question, should the Reserve Bank raise rates tomorrow?
Well, yes, I'll answer both in terms of we would expect them to be raising rates tomorrow. So that's a yes from me. And I think, yes, with these inflation numbers, they've been niggling away at us for long enough. And so, yes, I think we need to see higher interest rates as a result.
Okay. And let's say the RBA doesn't raise rates. What will the consequences of that be?
If they don't, well, it will give a clear message to the market that it can keep spending. Even though a lot of people feel like they're hurting out there, there's obviously too many people who aren't. And we need to see a position where cafes, restaurants, all those discretionary spending items, people going on holidays, we need to see them start to scale back. Now, I don't want to see cafe and restaurant owners hurting as a result of that, but really, that's what is the first to go in terms of discretionary spending if people need to save money. So it's until we see some spending cuts in the marketplace, we won't see inflation starting to drop.
I know that Jim Chalmers listens to all our episodes, so this is maybe a pertinent question, Owen. Jim Chalmers says the federal government can't be held responsible for the rise in inflation because it's being driven by an increase in private sector spending rather than government spending. Is he right?
Well, to a point, he's talking about just this past quarter, these past figures. But what about the last couple of years? I mean, give us a break. Yeah, it's all those measures of pumping more money into the economy. It's give us a break. They've certainly added to it, the vast majority. Yes, they've started to see that they were having that much negative effect, and they were getting some heat out there in the media about it. So yes, they've calmed down a bit, we've seen way too much activity from the federal government in terms of pumping up the economy.
We've discussed not just today, but in previous episodes, that the two things that need to happen for Australia to end this painful inflation saga is for the Reserve Bank to keep rates higher for longer and for the federal government to reduce spending. Do you expect either of those things to happen?
Well, I definitely think we're going to see higher interest rates.
For longer?
Yes, until this inflation genie gets back in the bottle, we're not going to see lower interest rates until that happens. But for the federal government, yes, they need to stop spending, but also stop pumping the economy full of demand by bringing in extra people. By increasing our population, you're increasing demand in there. So even though it's been talked about as being in a per capita recession for quite a while, the economy has been kept afloat by the higher immigration, which has kept the economy still growing, and that's really the big genie that needs to be put back in the bottle, because without that, we might not be in the situation where we have higher inflation and as a result needing higher interest rates. But of course, the government can say that they've kept the economy growing as a result. So I think that's where the devil lies.
Yeah, I was actually thinking about this the other day. Since Howard's final year in 2007, that was a surplus. We've run deficits every year since then, except for 2 recent years under the Albanese government, where we had a structural deficit, but due to high iron ore prices, we accidentally ran surpluses. So both sides, both Liberal and Labor, Liberal were in power for the coalition, they were in power for 9 years, 2013 to 2022. They were all deficits. Labor was in power for kind of 6 years before that, and they've been in power for 3 years since. And apart from those 2 accidental surpluses, it's been non-stop deficits for the past 18 years or so. So it seems like both sides are committed to deficits rather than surpluses. Are we ever going to get governments running surpluses again?
Who knows? Yes, it's been shocking for the past almost 20 years now, where 20 years ago we had a fantastic budget surplus every year, where we were actually saving money. We had money in the bank. We had that future fund set up. And then Kevin 07 came in, got spooked by the GFC and went and spent it all. And then that spending cycle just continued throughout, and and now we're in huge debt. So who knows? Now the public is used to just being fed money for no real reason, and it's yeah, when you give out lollies to 5-year-olds, it's hard to take them back.
Well, let's move on to our next story. Housing market experiencing structural shift, says property economist. Built to rent and other institutionally owned rental housing is emerging as a significant structural shift in Australia's housing market, according to Ray White, chief economist, Nerida Conisbee. Conisbee said the living sector, which includes built-to-rent and co-living developments, is helping to professionalise renting by replacing small-scale landlords with institutional owners offering longer leases, convenient service and high-quality amenities. Built-to-rent provides stability for renters and steady income for investors in a market starved of large-scale residential assets, Conisbee said. However, Conisbee also said the sector remains small and largely skewed towards higher income tenants, with rents typically above local medians. And despite a strong development pipeline, build to rent accounts for well under 1% of Australia's rental housing stock. Conisbee said that while investor interest remains strong, particularly from offshore capital, build to rent will complement rather than replace traditional rental supply in the foreseeable future. Owen, I love getting your insights into stories like this because, as we discussed earlier, you have a national property management business. You operate in 5 states with Leafield. You're very knowledgeable about this. What are your thoughts about build to rent? Is it a good model in your view? Do we need more of it in Australia?
I've been watching it for a number of years, and it's not whether it's a good model. It's just there's nothing wrong with it, and the more variety we can get, and the more supply we can put into the marketplace, the better. So there's nothing wrong with it in terms of adding more supply. But as the article says, it's more typically aimed at the higher rental market, and which is okay because it's just more supply in the market, and obviously those people are moving out of other properties, and the supply will flow down as a result to other properties. So it's yeah, it's do we need more of it? Yeah, the more the better. We need more supply to be able to help house the bigger population that we have, and that is still growing as a result of mainly immigration. And so, yeah, the more the better.
Okay, well, hold that thought for a moment because there has been controversy in America about the rise of institutional investors buying up large amounts of housing and renting it out. Is that something we should potentially worry about in Australia, or should we just let the market do whatever the market's going to do and assume that it will all work out?
I don't believe it's going to happen in Australia. What happens in the US, I understand the US market fairly well. The reason why a lot of institutional investing is happening in residential properties in the US is that the returns are there. And from an income point of view, the returns in Australia are not there. Institutions, unless they can build a product like a build to rent product from scratch, where they can build into it to the returns that are needed, for them to go out and buy standard 3-4 bedroom houses out there in the suburbs, it's just not going to add up for them, which is why we don't see any institutional investing in those types of properties. Large unit blocks where they can get the economies of scale, and they're able to get decent returns. Sure, that works, but not in everyday neighborhoods of houses with the 3 or 4 bedroom house. The returns are just not there. But the issue in the US with them buying up, yeah, there's some real problems there with the way, with the effect that that's having on different markets all around the country in the US.
If we were to see more and more build to rent in Australia, I'm curious as to how that would impact the rental market. One of the attractions of build to rent from a tenant's perspective is longer leases. Oh, and I'm
Mm.
wondering if more build to rent properties enter the market and compete with private landlords, would that force property investors to offer their tenants longer leases?
Um, it'll be fairly well contained within a particular small marketplace. So it'll be with higher end units, which will be more in the inner cities, and because that's the type of tenant that they'll be focused on. Um, so I don't think it's going to cause that big a problem. And it's quite frankly, if they want to corner that market, yeah, good on them. Because it's for the average investor out there, a high end unit in the inner city of any of our major cities is, in my opinion, and most property experts' opinions, not a good investment. So, yeah.
Our final story today, speaking of property investors, is property investors looking beyond capital city markets. Quality regional property markets are expected to become core portfolio holdings for investors in 2026, buyer's agent Lloyd Edge has told Australian Property Investor magazine. Edge said the pandemic-driven regional boom had evolved into a longer-term shift, supported by lifestyle preferences, improved affordability, remote work flexibility, and better regional infrastructure. However, Edge cautioned that investors should be selective and noted that investors were increasingly targeting specific submarkets rather than entire regions. Edge said towns with diversified economies, such as regional service centres, university hubs, and coastal locations with multiple employment drivers, were attracting growing interest from investors. Many of these markets were also delivering stronger rental yields than inner city areas while maintaining stable vacancy rates, he added. So, Owen, Lloyd Edge is arguing that investing in regional locations is not just a pandemic fad, it's now a permanent part of the investing landscape. Have you detected a change in the way property investors view regional locations these days?
Yes, most definitely. It's in my over 25 years in this industry now, working with investors. I've never seen this such sustained interest in investing regionally, where it's especially when it's not off the back of a mining boom. That's the only other time I've seen regional investing really happen. And but most of these investors are looking at regional areas that aren't really affected by any, mining booms at all. So it's really focused on good drivers that are looking at making it a long-term investment, or at least a medium-term investment where it might be something that you get into for the next 5 years. And then when that market flattens off, then it might be time to either hold and still keep the good income that you're getting as a return, because quite often these regional areas have got higher rental yields. And that's one reason why they're so attractive. And if they're overdue for a bit of a boom from a capital growth point of view, then that's icing on top of the cake right now in the short term, and it gives the investor choices of being able to sell for that capital gain, or keep it for that good rental yield. So yes, it's and quite a lot of this has been driven by the rise of the buyer's agent in the last 6 or 7 years. And it's because those buyers agents are always out there looking for the next good value investment spot. So, regional is really where you can find some good value.
Property investors tend to divide locations into metro and regional, but given what you've just said, is that thinking outdated? In other words, should we stop calling places metro locations and regional locations and just start calling them locations?
No, I think there's still a difference between buying in. Yeah, you can be a bit more, still be a bit generic in terms of city/metro versus regional. Um, and But when you talk about regional, there's there's apples and oranges. You can't always lump them all in. So it's a big basket of fruit, I should say. And when you're talking about regional, so you need to make sure you don't pick out that rotten apple.
Interesting this shift we've been discussing with more property investors being open to regional locations. I'm wondering if that also applies to the general public. Are more Australians open to living in regional locations? Are more immigrants open to living in regional locations? Right now, 2/3 of Australians live in the capital cities and 1/3 in the regions. Owen, do you expect that share to remain roughly the same in the decades ahead, or do you think more people will start choosing regional Australia over the capital cities?
No, I think it's quite possible that because of the rise in cost of living in our major cities, uh, as we all get a bit older, or we find work that is a lot easier to work from a remote point of view, then yes, I think we'll continue to see more and more Australians move to regional areas for a better lifestyle.
So I live in Sydney. You don't get much more metro than that. The place where you live, would you call that metro or regional?
Um, Technically, yeah, because I'm on the Central Coast, just north of Sydney, and it's still in some ways technically regional, but in other ways it's still included as an extension of Sydney Metro.
Mm.
Um, a lot of Sydney siders might not agree with that, but from an official point of view, it is classed in some for some reasons as being an extension of Sydney Metro, but for other reasons as a regional area. So, yeah, it's um, and that's where you see these large sprawling metro areas are just creeping ever further and further afield.
Mm. So it's interesting. Your location, it's kind of metro, kind of regional. I believe that's officially known as metronol.
I haven't heard of that before, Nick. Is that something that you've just come up with yourself, or?
I report the news, I don't make it up.
um, yes, as every good journalist would say.
Well, on that note, time to say goodbye to you, to our listeners, to Jim Chalmers, who I know is listening as well.
Yep.
And tomorrow is RBA Day, and I think we'll have plenty to talk about next week.
Yes, I'm sure we will, and looking forward to another episode of the weekly news. Thanks, Nick.